All right, guys. Good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of Gar Capital. It is Tuesday, December 12th, 2023. My wedding anniversary, 3 years. Just want to give a big shout out to my amazing wife, Vanessa. Thank you for all you do. You're an amazing woman. I love you. I look up to you so much. You're an amazing blessing in my life. And I love you, baby, if you're watching this. Let's go ahead and get to work. We just got CPI done. So let's go ahead and get started around the horn. Dow futures up 18 points, NASDAQ up 3. The S&P is down 0.10%. We were up a little higher. We hit 4,700 on ES on the March contract. 1906 on Russell, that just turned red. 10-year Treasury yields are pulling back, 4.229. The dollar index is down 0.13%, below 104, 103.96. The VIX down 1.43%, 1245. Crude oil is down 2.31%. So below 70 again. Wow. Gasoline wholesale, $2. Well, we're about to get into that one handle now. Very interesting how far gasoline can go. Gold futures, 2001, slightly above 2000, up 0.37%. Silver futures up 0.81% at 23.24, with copper futures at $3.78 this morning. Let's see here. Euro dollar up 15 pips, 107.81. 145.53 for the dollar yen. That's down 60 pips. Dollar Canadian dollar up 19 pips, 135.92. 125.45 down about 7 pips on pound dollar. Bitcoin bouncing back, holding at 40,000, 41,000 support, up 2.46% this morning after the bloodbath that was yesterday, as me holding Mara calls. But I'm going to go over that chart here in a bit. Ethereum 2,233, up 1% this morning. Good morning. Good morning. Well, let's go ahead and, well, first thing I want to go over this morning is the CPI number. So we're going to go into the best market blog on the internet, well, at least on Discord. The best free blog out there, I'll say that. CPI came in 0.1% on a month over month. This is the headline number. That's slightly above the expectation of 0.00. Year over year, 3.1%. Met expectations of the core. This is stripping out auto and gas, 0.3%. That met expectations with the year being at 4%. And that met in line. Dow futures were as high as 150 at that point. Here was the highs. I basically caught it in terms of the screenshot. You could see right now, again, we're sliding a little below that. We were at 16,526. We're now at 16,459. We had NASDAQ futures open. We closed it for a gain before CPI. So that was pretty smart to take that ahead of time, take some risk off the board. As you could see, inflation over the past couple of months, we could start in terms of CPI year over year, really since the year started. January was 6.4, February continuing to slide down. Really the only deviation that we've had is in July. We got to 3.2, 3.7, because that was when crude oil went higher. If you see kind of the correlation, as crude oil prices fall, CPI tends to fall as well. November up 3.1%. That's the lowest reading we've had since June. So good news. That's why we're starting to get the little bit of a melt up, not exactly a boom higher, because again, it's still higher, still unexpectedly a rise. Now, why does this matter? Fitch, this is Fitch, one of the rating agencies. Think of The Big Short. You know, everyone knows that movie. Quote, this will not have any meaningful impact on tomorrow's likely decision to hold rates steady, but it provides the Fed some ammunition to reiterate that rate cuts early as March 2024 remain premature. That sustained downward path in core services inflation that the Fed wants to see is still not within reach. So that's their opinion. Here's mine in terms of the Fed. I think we need to start understanding that this idea of rate cuts is not going to happen as quick as we want or as quick people think. In order to get rate cuts, we need the labor market to soften. CPI is important, but do you guys remember a CPI where we didn't have tons of volatility? CPIs back in the day, 2022, earlier this year, that was a big day. Really, the ones that have been moving the market has been NFP, non-farm payroll. And even that beating has still continued stocks in an upward path. So I think we're starting to get to the point here, and here's my point. CPI is not that important as it used to be in 2022, because if we are probably not going to cut rates early next year. That's my assumption. I don't even think we cut rates period next year, but there's some pricing in for March, there's some pricing in for July, et cetera, et cetera. But the idea I think people need to understand is that we're probably going to get higher for longer until literally the 2% target is hit, if they are steadfast for it. The only caveat that'll change this is the jobs market. If the job market gets softer, unemployment claims go higher, that's going to probably be something that everyone needs to watch for. That's going to be on Thursdays. Again, that's a good indicator of how the labor market is doing. But CPI as of right now, again, it's a 2022 thing, early 2023 thing. I think we can all agree that inflation has softened across the board. And we don't need CPIs to kind of confirm that. But at least now, what this CPI is trying to do is give us a hint of what the Fed is going to do. And the Fed is not going to raise rates on Wednesday. They're definitely not going to cut rates. So they're just going to hold. That's the neutralist idea. That's the easier approach for them. Keep the ammunition in your pocket, like Fitch is saying, and use it when you have to. But the one thing that did stand out to me yesterday, and I really want to share it, class. I say class because I feel like I'm teaching class. Let's see here. This is what I really wanted to show you guys. Okay. We had a 10-year Treasury auction. Guys, remember that? Yields were up a little bit yesterday, yes. But the Fed bidding 10-year notes was a total of 0. Now, that in itself is not something that's, oh my God, strange. This is not QE, quantitative easing. Fed is not buying bonds, except they did. They bid for 3-month Treasury bills at 1.5 billion, and they bid on 6-month bills at 1.4 billion. I don't understand that. I've been trying to find out, why is the Fed buying bonds here? That's something you do when you're cutting. Why are they buying Treasury bonds right now? It's either that they see something that they're not saying, something bad is going to happen, that we need liquidity, or they're just full of it and everything that they say is thrown out the window. I still don't know which is it, but it seems to me that the Fed is kind of front running, meaning that they're kind of preparing for rates to go lower. So, of course, buying bonds here would be smart if you expect rates to go lower. That could be paranoia. That could be one of those conspiracy theories. I just thought it was very strange. So, with that being said, the runway is clear, in my opinion. It's starting to get a little clearer picture. I think if tomorrow we can still kind of hang above 4650 or so on the S&P, if we can get above 4700, we only got 2 weeks away to all-time highs. The countdown begins. Oh yeah, but we need to get to 4700 this week, in my opinion, on the March contracts, not on the SPX. On SPX, we need what do we need? We need to get to 4641. Obviously, we're not open yet, so this is probably going to be flat. We'll assume around 4620 or something at the open. So pretty flat from where we are based on futures movement, but we need to get to 4641. Maybe the Fed tomorrow, with Powell speaking, maybe he says, hey, we're starting to get to the end of rate cuts, or kind of give some kind of rate hikes, give some kind of hint there, and that end doesn't sound too hawkish that, oh, we're still looking to raise or some craziness. Then we're starting to open up the skies for more upside. Okay, now let's get to the questions. Good morning, Scotty. Good morning, Ryan. Any recommendations on where to invest $20,000 for the next 5 years? Okay, so with that being said, it really depends. And the reason I say it depends is that I know that you need the money within 5 years. It's just an investment for 5 years. But how about access? Do you need access to this capital? If you do, then you kind of need something that you can sell pretty quickly in a pinch. That's where stocks, bonds come in. But I mean, if we're just talking about money that is like retirement money, money for saving for a wedding, saving for a kid, it's completely different than someone saying, I saved all this money from a part-time job and I want to flip it and I want to grow as much as I can. So if you can give a little more detail into that, that would be great. You late to the game up here. What did I do, Ryan? I did something wrong. I'm late to the game. My fault. Solana. I don't have a chart on Solana, but I'll see if I can grab one. Solana is the crypto. I can't say that I traded or even own this name, but let's go to SOL. Crypto, right? Solana. There we go. Intraday. All right, we're going to go to a year to date. I'm assuming it's going to be up year to date. All right, what are we looking at? No lines, no annotations, as the chart master would say. You need to get right above here, guys. I don't have, why does it give me percentages? But that's the level that we're looking for. Let's see if we could get this settings going. Because it's giving me percentage gain. That is not what I want. I want prices. Well, just based on this, let's just kind of go by this because now I'm a little confused. I don't know what the current price is, but you have a level here from March 22. That looks to be possible resistance, but I think Bitcoin's going to go higher anyways. So I don't have a price, but if Solana is kind of lumped into that Bitcoin realm, then it's going to go higher across the board, crypto across the board. So I don't have Solana on TOS, unfortunately. So I'd have to go back and check. What I'm going to do for you, who asked that question? P. Reed. What I'm going to do is that I'm going to go ahead and kind of dig into like TradingView after the video is done. And then I'll give you a couple levels on the comment section. So just a heads up, P. Reed, there's going to be a comment out for you regarding Solana. Ryan is talking about Broadcom. Oh my God, didn't we talk about that the other day? Above 1,000. We said, yeah, it's just going to go to 1,000, but I didn't trade any options on it. Yeah, I mean, what more can we say that hasn't been said? AMD has been great too. I was just a week early on that one. But Broadcom, do I want to chase here is the question. Maybe. I mean, it's an expensive option to trade. AMD is a complete breakout, guys. Complete breakout on the daily. I was 1 week early, unfortunately. If you guys remember, I think we had the 125 calls. If I would have bought them for the 15th of December, we'd be singing a different tune, but I did not. And that's okay. Mistakes happen. But AMD still has a path to around 138.57. You're not too late on AMD. I think we get an opportunity to trade it personally. If we can kind of maybe get back to around, let's see if now we're down a little bit, 133. If we can break the recent highs of 135.04, 138.53 would be the target. So let's keep an eye on AMD together. Let's see. No, 20K investing in all-time highs. Well, Ryan, I think what he's trying to question is that, again, if you're just saving for retirement, I don't think you're late or anything like that. Not at all. But when someone says investing, I don't know if they mean investing in themselves, because there's many things that you can invest your 20,000 in. I guess you could put a down payment on a property. I'm not the biggest real estate guy, but a lot of people definitely want some ease of capital liquidity. If you want something on literally on the safer side and you're trying to get access to it, bonds ain't bad. I mean, I do expect bond yields to come down. So those bonds are going to pay out a little better off. Treasury bonds, the safest thing out there. Again, I'm not saying you're going to get a lot of action, but it's going to be safer, 100%. Let's see, Amazon. Oh, Netflix. Ryan was asking about Netflix. Yeah, I have a target here of 480. We rejected the 50-day. Where are we now? 464.80. There was some news that they're taking market share from Disney Plus. So we got two options in terms of Netflix. You can always play long here above 470 to target 480, but that's a little too close. Or you can get above 480 and then target 500. So Netflix has a path higher, absolutely, but you're right on the 50-day. So we need to get a little more love there. Made a killing, nice. Let's see, GS. Goldman Sachs this morning is up. I do have calls on it. So again, what we're trying to get to is 355. Once it does, then we're good. I want to make a point on Boeing. Remember, this was part of the watch list this week. This is green. It was 32% at the session close. So I just want to give everyone a heads up that has it, because I also went ahead and posted this on the premium signals and basic. BA's green pre-market, and we were 32% at close. So more than likely, since we're up this morning, we're probably going to be above 40% if these levels hold. So don't wait for a signal. You take it when you want. Enjoy your money, leave a runner. I'll let you guys know, as always, to take it. I was hoping for a little more of a move on CPI, but the money's right there. We take it, move on, leave a runner. We'll probably more than likely get to 250, which would be in the money for us. So great trade on Boeing, as long as this holds. I don't want to ruin it. I don't want to jinx it. He said flip it. Flip it. Oh, I would love to flip it. There you go. Thank you. I didn't read the whole thing because it kept going up like this. If you're trying to flip stocks in 5 years, man, it's kind of tough to go ahead and buy a Microsoft up here, but it is going to go higher. So the question remains, what are the themes that we're looking for? That's kind of like the top 10 of 2023. Man, I'm just going to say it. I really, really like small caps moving forward. I really do. If you're trying to get the most you can, I like small caps next year. It wasn't the top 10 this year, but again, the actual ratio between tech stocks and Russell, the small caps, is very, very, very low, like near record level lows. So that would be worth a great flip for the speculator out there. Would I go all in? No. Don't go all in, obviously. But again, I'm going to talk about the themes in terms of the stocks that we're going to look for, obviously, next year. This past year, like I talked about in this year for the top 10 of 2023, we were talking about the themes of lower dollar, lower inflation, and lower rates. And so far, those three have worked. So next year, we'll talk about what the next one is. But there was a lot of opportunities just in those three themes. Mega cap was a big beneficiary. We talked about semiconductors. Again, you can watch that video whenever you like. But in regards to that 25K or 20K, excuse me, yeah, there's a lot of opportunity out there, I think, in small caps for next year. But again, that might just be a 1-year thing too. So right now, hey man, making 5% return on a SoFi high yield credit, a high yield savings account while you wait for a little bit of a pullback isn't terrible either. So you got a lot of options because right now cash is king. At this very moment, cash gives you a lot more access than what it would used to in 2021. Do you trade options on TLT? We have traded options on TLT. It's worked out sometimes. It doesn't work out sometimes. The problem is that you could be in the money and still lose the trade. Just not a lot of volume there, or a lot of momentum there on a TLT. The way, like for example, a Tesla. SQM. Let's see the levels. SQM is just chop on the 1 hour. Wow. Ooh, 15.25, huh? You're below the 200-week moving average. If you're looking for confirmation, probably 60 because you're still below it. I would say if we were like right here, I would say wait for 60 to buy because that would be the 200-week moving average. But let's see if you can get above that first. So probably 60. I wouldn't want to catch the falling knife. Yeah, if you get to 40, again, I don't know anything about this company, just charts. This may not even be support. At least if you get some kind of bounce and you get some momentum above 200 weeks, that's usually a good sign of things to come. But being below that, not the best, no. So that is where we are this morning. Awesome. 248.01. Okay, now, see, I jinxed it. I thought, of course, the second I talk about Boeing, it just falls like 7 cents. Well, you know what? We'll make it the best Tuesday we can. Let's go and answer one more question on Diz. Diz has not been good to me in terms of trading the stock, in terms of options. It's just chop. And you're rejecting the 20-day. You got a gap here at 84.95. You got a gap here at 83.32. You got a gap here at 81.62. I'm still waiting for 96.62 to break. Right now, I would just stay away from it for the most part. You're still below the 200-week moving average. My God, Disney needs to show a lot more. You're just not there yet. No, not even there for puts because it's just choppy, and that sucks. All right, guys, we'll go and leave it there. Have a great rest of your morning. I will catch you guys tomorrow morning for the next morning notes at 9 a.m. Eastern Standard Time. One more question for Avgo. Does it continue? You got to break 1039. That's your highs. If you break that, just like kind of like AMD we talked about, if that breaks, then yeah, you definitely have some momentum there. There you go. Sometimes the names just run. Have a good one, guys. We'll see you tomorrow. Cheers.